Traders, today we're going to be going over the SP 500 and the Nasdaq 100, exactly what is happening with these markets and what to expect. Specifically on Friday, we were covering Jackson Hole and what happened out of that, and we have clear indications of what Powell was meaning when he was talking about the pain to come on the market. So you're not going to miss exactly what is happening going into Monday morning. So like and subscribe, do what you gotta do because it is time to clock in. So Friday, when we were going into exactly what Powell was saying and possibly the downfall of the coming few weeks on the market, what were we talking about and what was quote unquote the pain he was discussing? We saw him vaguely discussing the pain ahead as Fed sticks to the fast lane to beat inflation, right? We discussed about the 4% number or ceiling to where they had those rate hikes at and how that path would progress. As we head over here, we can actually see some of the self-fulfilling prophecy coming out into some of these energy bills, specifically going into Europe. British household energy bills up 80% to over 4,000 a year right now. And this number is just getting more and more ludicrous. And it's looking like there's no real stop when it comes to this. And we're going to get to that here in a second as well. And then this is where the pain probably starts to set in. And this is where you have to be, where does it stop? You know what I mean? That's the real question. Fedmeister need to raise policy rate to a little above 4%, which, again, we're going to talk about with Powell here in a second, and hold all of next year. He sees no rate cut for 2023. And this is kind of the sentiment that we were seeing the day before when it comes to Bostic and Bullard and some of them. They were discussing what needs to happen, and they need to not take their foot off the gas pedal right now. And it kind of has been the same wording and verbiage from them, but I want to highlight, coming back to Powell, what pain is he talking about? Because hypothetically, if you look at what the government's been feeding us and telling us is the worst is kind of behind us, but now you're seeing the Fed kind of step to the plate. And even though we wanted to see some upside near the end of the week going into Jackson Hole, I'm okay with this actually, because in the long run, this is going to help our long-term positions. Now, short-term day trading, yes, you probably took a hit on Friday, but this is going to set you up, and I'm going to have a direct strategy in how I'm going to start attacking this week specifically. So what we're going to do is come straight over to the charts and start looking at this more in depth. Now, looking at the Nasdaq, I'm looking at the daily chart. We have no indicators up here, and I want to just highlight what's happening. It's a clear head and shoulders right now. I just wanted to draw it out as clear as day so you can see it. We're going to get rid of it now. But that's there. It's important to know. From this, where are my targets? What am I viewing? Now, downside targets right now, I have to be looking towards 12.1, lower 12s, maybe 12.05, all the way to 12.2. That's going to be a very big level. Why is it a big level? You can come back into June, you come back into early July, and you can see how big of a level that was, and you eventually got the break and then the retest. Everyone remembers the retest because we made so much money on that run up here, but you can still see where you're at. It's also worth mentioning that you're not necessarily out of the trenches of this zone either. Now, we remember that 12.8 level, right? We still have this. We still remember how big of a level all this was right here, the 12.8, how important that was. I told everyone if you get below 12.8, that's when the shorting was definitely a gimme. That was the easiest opportunity. And you can come back and you can just drag this all the way back and you can see how big of a level this was, all the way basically to 12.8 flat right there. I can't really pin it on there, but right there. So you can see this was your bottom, this was your top, and setting into motion. Now, so going into this week, what are we looking to trade? Let's go and break it down to the 15-minute. Also, too, if you're interested, I'll have stocks near the end of the video. I'll have chapters hopefully in this one as well, so you can just skip ahead if you need to and come back to this, whatever you want to do. So what's going on here? I suspect, and I'm going to bring up the opens indicator so we can see this a little bit more clearly. This is just the monthly, weekly, and daily. I have a video going over this as well. But I anticipate into this week, I'm going to go to actually to the 1 hour real quick. I'm just going to zoom back in. What am I looking for? I don't know if we're going to get any love on the market. I want to be very clear about that. People keep asking me, we're going to get a bounce? Are we going to get a bounce? And I can't just rub my crystal ball and say we're going to get a bounce. However, I do anticipate some type of love, some type of bounce type action. I would love to see it. And until you get back above 12.8, I have to remain a bear. So what am I looking at? Best case scenario, I mentioned it on Friday. you start to get some type of bounce towards the upside, something getting you back to 12.8, right? And then that would be your opportunity to set out to, trade back towards that downtrend, right? That's ultimately what you would want. Now, you don't always get the perfect scenario, so I'd like to give you backup scenarios as well. As far as day trading, I think you're gonna have a little bit of resistance right here around 12.65 to 12.7 coming back. That was your previous high you had right here for, about 3 days, give or take, but it was also a key monthly level. So I want to see that hold as well. As well as 12.7, it was your low that you had back here going into early May. Basically beginning of May right there around 12.7 flat. So I'm going to try to see if that's going to hold. If I'm going for more aggressive entries, that's what I'd be looking at. That's my area. Now, if you're going to be the most conservative trader, what I would be looking at is possibly getting some love, maybe trending, then pushing up, trying to get that 12.8 touch. That's going to be your best bet. I mean, that's just the best opportunity you're going to get. However, I want to highlight as we go back to some of these, past trading sessions to where bears really stepped up, typically when bears step to the plate, they don't take the foot off the gas pedal for 2 to 3 days. So it's not likely that you get that bounce, but I just have to show key areas that I'd be looking at. Now, when we get into stocks, it's going to be a little bit more clear, but I want to show you the overall trend here. So it's imperative that we know what we're looking for. Now, we're going to go look at the SPY and look at ES here in a second as well. But SPY just gives you a better look because these key levels, obviously, most of you people are trading the SPY or Qs. So I like to use Nasdaq and I like to use SPY because I follow Nasdaq so much with futures, but also I know everyone here is so relatable with SPY. And we can actually go and look at these key ranges of where we've been at. And as we're here, we can see you started to break through that 406, 407 level, and it was kind of a wrap after that. You can see you break through that level right here, and then bear step in, and they push you down to the $3 at the end of the day. Where are we going to here? What's the key levels? Now, I've already seen a lot of questions about specific gaps in the chart, things like that. And I don't want to highlight too much of gaps or, hypotheticals there. I want to keep it simple with the overall trend we're in. First off, 400 most likely gets tested this week. It's almost, I would say, I don't want to say it's a guarantee, but it's close to it. This is going to be a monster level, in my opinion. Basically, 400.3 all the way down to 398. And again, you even have to highlight this little bit of an area right here. So I want to highlight that as well. So you have a pretty big block, and that's going to be a monster level to watch. If you get under this 398 region, it's going to start signaling trouble. And when I mean trouble, I mean deep downside. So if you start breaking through that level, you automatically have to start coming back down to your next level. And for me, it's right here. You're basically coming down 391, 389 in a rush. That would be my next key level to watch, and it lines back up to where we've been at. So these are going to be the areas and levels that I'm going to be watching. Now, again, I like to always show both sides of the chart, the up and the downside. So if you're looking here, if you start getting back into this area of possibly getting back above 407, 408 range, you're looking good. You could possibly start getting some love on the chart. So that's why I'm so big about watching Nasdaq, because futures are going to be going tonight, basically 5, 6 p.m. Central. So you'll be able to start tracking this as we're going right now. So again, that's what I'm going to be watching specifically here on futures. If you get back above 12.8 again, you're going to be watching this key area, basically 12.8 through 13,000. And then that's going to be your kind of key zone to be basing it off of. But as of right now, I have to side with downside coming, right? I told everyone, you break below 12.8, you're bearish, okay? Until then, you have to play the upside, okay? That's just the way the trend goes, right? So if we look back at this overall chart, I have no regrets in the outlook that I was taking, right? Because I kept saying it. You break 12.8, you're bearish. You get above 13,000, you have to remain bullish. Guess what happened? You came down, touched 12.8, you bounced, you came back up, you hit 13.2. So we made the right overall play on the technicals. You just didn't get the news and the fundamentals you needed, all right? So the technicals, like I always say, if it is not broken, do not fix it, okay? The risk to reward, it was there for us. We had the opportunity. sometimes things aren't going to go your way. Let's get into some stocks that I'm liking and things that I'm looking at going into this week. Now I'm going to make this a little bit more clear. I'm actually just going to do this on the red list so it's easy and I'm not just going through a few different things. I'm actually just going to go right through Tesla, and I'm not going to go through 4 stocks for you guys. I'm going to try to do 4 to 5 stocks every single day here, depending how I'm liking the market. And I'm going to have levels specifically here as well. If you're interested, I'll have this all on Twitter and I'll have it posted, and you might get them a little bit earlier, but I have already started posting some of these levels as well. So when we come here, I want to start looking specifically at Tesla here on the 1 hour. And you can break this down to smaller time frames if you want, but I want to highlight where we're at. So beginning of the week, and there's one level I did miss. I mean, I will say this right here is going to be a pretty big level. So basically right here through here, this is going to be an area of support. However, I want to talk about why I'm not too heavily watching that right now. So looking at where you're at, I want to highlight the top and the bottom of where we're at. Basically the bottom level being approximately 282 to 283, roughly 283, all the way down to 279. This is where I believe you're being drawn to right now. The top side, 300 up to 302, which is that monthly. You could really bring this all the way to right here if you wanted to. I just don't like having monster zones. But anyways, those are our 2 levels. Basically 300, 299 to 301, down to 282 to 279.5. That's where you're being just a magnet up and down, up and down. Now, in between here, I want to highlight the key levels I'm watching. Tesla's moving really good. They just did their split, and I actually love the way these contracts are moving. Friday, Thursday, I was just watching what was happening. I was like, look, these contracts are moving. I was very taken back by it. I assumed a lot of the Amazon play would happen. With the Amazon contracts move a lot slower now, Tesla still moves great. Great day trading stock. Probably moves up to the #1 day trading stock that you can probably attack right now. I'm just going to say that. So going into this week, potential upside, it's there because 1, you're hitting this local bottom that you had, your weekly low from last week. That was your local range right down here, basically 287.5 down to 286.5. That was your range. You're coming down real slow too. And if you look, this is definitely a wedge. So if I come into about the 15-minute, I want to highlight what's happening here. Me and Jay were actually talking about this on the weekend as well. You're definitely hitting a wedge, if you will, but it's very important to know that you are definitely channeling towards that downside. But I want to highlight the possibility of a descending wedge here. Again, the market is bearish, so we're not going against the trend. So I'm not looking to grab calls on this right now. Why? Because overall in the market, we're looking at downside pressure. So what would I like to see? If we see some upside, that's not the worst thing. We'd want this to get back to locally last week's level, that local bottom range we're watching right here, basically 291.6 all the way up to 292.6, basically a dollar range. This is our shorting opportunity right here. Now, if SPY start to slip and they start to fall, I would be watching to see if you break below this local level right here, about 286.3. You break below that low, you're probably going to start dropping pretty quickly towards 282, and you'll be able to make a decent size off of that as well. So that's what I'd be looking here on Tesla. Next up, we're looking at AMD. Now, AMD, NVIDIA, I'm probably going to go over NVIDIA as well. Yeah, they're the next one up. So semiconductors, I've been talking to people in Discord about this a lot. I like to look at sectors that I believe have maybe the most opportunity. And right now, I believe semiconductors have the room for the most downside. Why? Because demand is down, because crypto is getting hit, and just locally, demand is down, right? Demand has dropped on semis. They're still performing. They're still doing well, but their earnings, they're moving earnings down. They're readjusting consistently on NVIDIA and AMD, and their earnings just weren't fantastic, okay? They beat the numbers they're throwing out there, but they're not performing where we like them. And if we look at some of the retracements already happening in the market, AMD and NVIDIA are already really getting shot down. So AMD, what am I watching for? You're sitting at a pretty big level. These are your previous highs you had back in this region, going back into June and going back into late July, right? That was your highs you had. So you start breaking, you make a new low here, basically 90.9. You get below that to like 90.7. I have you falling pretty quickly towards 88, 87.5, and most likely tracking down towards $85. You know, if we really start slipping on the market, we're probably going to make new lows across the board, but I want to highlight and make your key levels known. However, if you don't start breaking this new low, I'm not looking for downside, okay? Because where are we at? You're sitting at a major level. You're holding this level as we speak. If you start to push back up, it's highly likely you retrace back towards that 95 region. Look at how well this level's held. I mean, honestly,
Basically, since last earnings, you tried to hold this 95, 96 region for so long, and you've been getting so many retests. So I would love to see a retest here and going into NVIDIA as well. However, you need to recognize where you're at. You need to recognize if you drop, you're looking for that opportunity, and you need to just be watching the market as a whole. Next up, NVIDIA, one of our favorite plays, probably one of the best day trading stocks there as well. Look at that, just terrible shot to the downside. Now, right now, where are you at? You're holding that previous low you had here as well, and I want to recognize that this probably isn't going to be the best support, but 162 was kind of like last line of defense on Friday. Now, going into this week, I believe you're probably going to finish up this dip hitting 160 to 161. Just really, really likely. It's also worth mentioning you have a daily gap down here to 157.9. NVIDIA has been very good when it comes to filling these daily gaps, specifically on the daily. I can recognize this is the daily gap just because this is where the daily started and that's the high of the day. So I just know that's where the gap fills. But if we go back to see some of the previous gaps that are filled here on NVIDIA, what happened? Remember this one right here going up to 180. We traded this. Everyone remember. So we always talk about filling gaps. You don't look to fill gaps on every chart. You look to fill gaps on a trend. So when the trend flips, we were never looking to fill a gap down here while we were trending to the upside. However, when you start to break down, you're looking to fill those gaps. For instance, when we were breaking down here, we were looking to fill this gap down here. And guess what? You did fill it. You filled it right up here because this is where that daily level was. Coming back down, this is what we're looking at right now. You're breaking down the trend and you're getting very close to it. So now we're looking to fill that gap. And remember, we traded all these gaps here on NVIDIA. We traded this one. We traded this one. This is how we were playing AMD as well. So make sure to know we're just following key things that we've already done here in the past and we're repeating them, okay? Because if it's not broken, don't fix it, people. Play the trend, and that's what we're going to do. Last but not least, Amazon, probably my favorite overall viewpoint here is Amazon. Amazon's been a king of filling gaps lately, and that's what we're looking at here. Last week, I mentioned this play, and I basically said if the market starts to dip, Amazon's the play. So Amazon dipping, this is what we're looking for. We get that first level test of that high, basically your high that you had going into the earnings pre-split, and that was right here about 130.7. Perfect touch, and you're bouncing. Now, I anticipate you're going to be working towards 125.5 in a rush. You're going to have some levels here, but I think this is just going to get blown through. Basically 130 through 128 is just going to get blown through, going down to 125.5. But you also, where this gap fills is right here, 123 roughly. So I'm looking for Amazon with some monster downside. The trend is flipped. This is what we've been waiting for. And now we have some opportunities presenting themselves to us. However, I want to let everyone know if you're looking at these plays, I'm not blindly running into them, okay? What am I watching? Again, it's what I lead every video with, the Nasdaq. And guess what? If the Nasdaq starts to get rejected at these levels, right? If you start to bounce up and get that push and then rejecting, that's when you know it's go time for these plays. Because guess what? You're looking to see if bulls are going to respond and there's going to be any buying power on the market. If the buying doesn't show up, that's when you know it's time to start playing the downside.